Hello, am I audible? Well, sorry for that. There was a glitch, I guess. Thank you all for bearing with us. Just bear one moment, please. Well, hello, thank you so much. So I'm Shananda Dash. I'm the Forex and commodity mentor, as I was showing in the screen in Elon Market's flagship mentorship program. I'm part of the Forex commodity team where I teach the global market approach, and that I showed you in yesterday's session, which was our first session. I hope you all had a great holy week, holy holidays, not like the glitch that we just now had. So now let me share the analysis screen, and I will start where I started last time, that with the bond market, global bond market. And so this is the US bond market, US interest rate, US treasury, which is considered as the global benchmark of interest rate. And if interest rate goes up, economy will not do well. Companies will need to pay higher cost of interest. So that's not good for stocks as well. So since interest rates are broadly in green zone above all the moving averages, overall momentum, these two are momentum indicators. So both the momentum indicators are on the positive side. So this is, we can say, short-term interest rate are going up move. Whereas compared to the short term interest rate, the long term interest rate move is much more tepid. That's why we are seeing what is happening in the forex market today. Short term interest rate was much more showing much more strength compared to long term US interest rate. As long term interest rate is, as I can see, is struggling. So what we saw is yen, Japanese yen is the counter that is leading the correction today. Today was a day where we saw broad US dollar correction. So yen was leading the day since the morning and still pretty strong. As US long term interest rate, Japanese yen and yen move depends more on the longer end of the curve. That's why, since long-term interest rates are struggling, we can see USD JPY is the counter moving sharply lower, giving up large chunk of the gain. However, still momentum is somehow bullish. Momentum is fading. So overall, I was bullish on this pair. So I have to cut back some of the bullishness as momentum is clearly fading here. Still, overall, we are in the green zone above all the moving averages. And as USD JPY might correct lower, that means JPY INR, which was steadily moving lower, now can give an upside correction. This was a big green candle. And momentum still on the bearish side, but bearish momentum is retracing back, as you can see. So Japanese yen, we might look for some profit booking opportunities, whereas we might look to sell again when along these moving averages or any other moving averages that you might be using. 721 is a good moving average to use. So Euro USD was much stronger compared to GBP, but that changed with this big move. This move, as we discussed, the biggest events of the coming days were 7th Fed Chair Powell, and 10th is US non-farm payroll, means unemployment report, and on 14th the inflation data is coming. So on the 7th, this was the big move, and Fed Chair indicated more interest rate hike. So naturally, dollar got stronger. So this was a big move on euro's part. Pound was much weaker compared to the rate zone. So pound led the fall. Still bearish. You should look for sell resistance opportunity when further correction happens. Main focus remains Friday. So focusing on Friday, big players will be looking for short position entering when pounds may be giving further correction towards 1.195 area. GBP INR still bearish in the red zone, below all the moving averages. Momentum below in the red zone, so clearly it's broadly in the bearish zone will again look for sell resistance opportunity. Euro INR completely in red zone, again or below all the moving averages, momentum in the sell zone. So Euro INR is also my outlook is bearish. JPY INR is compared to all the others today was stronger. We discussed the reason. So here we can see momentum, bearish momentum is fading. So jumping to short may not be a good idea. Let's see what happens. We can short again if it breaks lower 0.596, or I would wait for a further correction or price action, selling price action around these areas. So that's broadly with the currency market. As dollar when dollar was weaker, what we can expect in the commodity market is bit of a correction against the sell that was happening. So let's start with the gold, and we'll start with the COMEX gold or the international gold or the spot gold. This is the spot gold rate. So broadly, we are witnessing after this big Powell move on 7th, we are witnessing some slight correction in COMEX gold, still bearish. So big players would be looking for selling opportunity again in gold. So we should look for short opportunity below 1800 or sell resistance opportunity when gold corrects further before non-farm payroll. Similar analogy with silver. Silver was much more bearish compared to gold because gold is somehow benefiting from this geopolitical tension between Russia, Ukraine, European Union, and United States. But silver don't carry that premium. Silver is much bearish. Natural gas, things are gradually changing in natural gas. We had a strong down move. Currently, there is no trend. All the moving averages are flat. Broadly, bulls were controlling the momentum, but now the momentum is clearly fading. So, jumping to buy trade may not be good idea, but since it was a big correction, there is an opportunity of further up move towards 3.30. This is the international natural gas. Let's come to India gold. This is the big India gold 1 kg contract. So broadly similar analogy in the bearish zone below all the moving averages. Silver, similar analogy below all the moving averages and going down. So we should look for selling. We should be, since we should be with the trend, we should look for selling opportunities in silver. If we look at the industrial metals, which are copper, they're broadly directionless, but currently you can see background is red, which is indicating bearish phase. The momentum in the below zone, the spikes are happening below the zero level. So this is the bearish zone again. So broadly, copper is hinting at weakness. Aluminium is significantly weakness is persisting. Lead similar below all the moving averages, bearish momentum fading. So broadly, they are moving nowhere. Let's come to crude oil. This is the MCX crude oil. You can see moving within a broad range. I personally am a positional trader, so I look for a longer term position. But this is also a good opportunity for a lot of short term traders. This was really a good opportunity that it is steadily moving within a range, and I'm expecting that this move in crude is likely to continue further. With that, let's come to the indices. Indices are the last one to that I consider in the analogy. Once all these are done, we can see the broad picture. So this is, if I consider as the price action, looks like an evening star below all the moving averages. So S&P 500 or ES1, which is the global benchmark, US benchmark, is bearish. So not a good time to jump to stocks from global perspective. Similarly, Dow is pretty bearish, red zone. Momentum is clearly in the red zone. Similar for Dow. This is Nasdaq. Nasdaq is interesting after signaling bearish trend for a very long time compared to S&P, which is signaling in the red zone background. Dow. Nasdaq is more of a rangish or a neutral zone. This could be an signal that we might look for IT, some of IT stocks in the IT sector in Indian market. So broadly VIX, this is the volatility index broadly moving lower. So this is just part of a sell-off, not a major crash, because for major crash to happen, we need a drop, which is still moving lower gradually. I think with this global market perspective, it is done. For Indian market perspective, I would like to invite our mentor Shorodip sir in the TMP program. He covers vastly the technical analysis. Wonderful mentor. You should all try out his course. That's a must for technical analysis, and he's also a master crude oil trader. Welcome, Shorodip sir.
Hi, Shananda. I was listening to you. A very nice description of what is happening globally. And I was thinking that how a trader who is from. Are you able to see my screen?
Not
Are you
yet,
able?
sir, but we can hear you and see you.
So I'm trying to share present my screen. So so can you see my screen right now, Shananda? Is my screen visible right now? Is my screen visible right now,
Yes,
Shananda?
it is visible now, sir. It is visible now.
Yeah. So what I was trying to tell for some time that the entire global market, because our Indian market follows Dow more precisely. So from October 2020, October 2022, okay, to till date for last 6 months, Dow Jones is stuck in a range of I would say 31, 32,500, 600. On the top side, 34,500, 600. Okay, so this is a 2,100 point range, precisely to be for an index of 35, 36,000 base. It is just 6%. Very rarely, an index of such importance remains in this range for such a long time. Why is it happening? This is happening because obviously the Fed is increasing its interest rates again and again and again, and it is taking the interest rate towards 5.5% or 5.7% that is getting priced in now. But what we can see that US jobs and US inflation is not coming down. So the earnings of the companies are not expected to come down. They have come down a little bit, but not a huge correction. And that is why market is was expecting till now that that they won't be able to actually take the economy to the recession, and they would possibly avoid the recession. Okay, I will like to show you of a few part of the stock is social. So if I go to the stock ideas, okay, or if I go to my profile, you see we have been posting about these things for quite some time. Okay, so last week we posted that US 6 month yield has uh,
Sir, we cannot see that screen, stock at social. We're still seeing the Dow Jones chart screen. You have
okay,
to
okay.
change the screen.
So can you
Yes,
see
now
this
it's
now?
visible. Yes, yes.
Yes, thank you, thank you. So what we were showing here is that the Fed, it was last, I think, just a second, last Friday. Okay, last Friday we were sharing that this was market was expecting new high in Fed fund rate, and that's what happened actually. If we see uh, just after this, the Fed actually announced, the Fed Powell announced that they are going to increase the interest rate. Yeah, so here I have said that exactly what Powell has said, that new Fed fund rate highs are now expected, and that is why Fed Chair Powell says interest rates are likely to be higher than previously anticipated. Now Fed has understood, and today there was an interesting comment by a uh, by an economist who said no exit ramp for Fed Powell until he creates a recession. The Fed was expecting to raise interest rate and expecting that the demand will come down, and that is why recession would be avoided. But there won't be a recession. Now Fed has understood they have to be strict enough so that the inflation come down, because that is the primary. Because otherwise, what is happening with this 5% interest rate, if the inflation is remaining so high, so it is becoming part of the system, and that is quite harmful. That this high inflation becomes part of the system. So Fed has to be aggressive, and that's why there is a chance of they becoming aggressive, and actually economy getting into recession. The market was expecting to avoid such situation, and that is why market was waiting out here in the Dow Jones. And that actually you can see uh, uh, this 6 months, 7 months, this kind of range. I don't remember that whenever I have seen such kind of a tight range, not in post-COVID era and not in pre-COVID era also. This kind of tight range for 6 months, I really remember that if I have seen. Okay, ranges are generally much bigger. Now, due to this, what happened is that now if I go to the Nifty, and if you see this, the Nifty did not do this just from the October. October it was still moving, October and December, but from January, February, March, it has also come into this range. Now the Nifty range is strictly 17,260 to other on the upside 18,080. So this is a very broader range, and Nifty is likely to stay in this range for maybe 1 more month or so, and that's why few stocks will gyrate from up to down. There will be random gap up and gap downs based on what Fed officials say in the USA, but overall the market will be in the range bound, and that's why in Indian market it becomes very difficult for people to actually trade based on the gap ups and gap down that is happening in USA. But that is where the scope of being a multi time frame trader comes, right? Like I showed you here. So I showed you. I'm going to my WhatsApp. Just a second. So when so this is my WhatsApp that is loading. Okay, so this is our TMP, the TMP program that we and Shanando both are mentor, along with Vivek sir, Chetan sir, and Abhijit Paul sir. So here the post will come, and I will show you when actually the Fate testimony had come on that day, on that particular evening. That is on Tuesday evening, when Indian markets were equity markets were closed, but Indian commodity markets were open. So actually, Sanando and me were all at that point of time letting everyone know about what was going on. See, the so quick post, like 8:40, the testimony ended. We posted our analysis immediately. Sanando was 8:44, I was 8:45, and that was actually golden moment actually for to short the all the commodities on the downside, because it was a dollar dominated move, because dollar was getting stronger, and we were saying that, see, the near term bond yields are rising, and the overall the later bond yields were falling. So if I show you what gold did on this particular day evening, so I'm going to gold MCX futures. So see that huge red candle on the Tuesday evening. If I'm talking about
Sir,
crude
it's
oil.
same screen. You need to change the screen, sir.
Okay, okay. So sorry. So I'm going back to on gold on that day. So you can see that the gold had a huge negative candle on that particular day, and uh, in the crude oil, I can show you crude oil. Okay. So if you look at the MCS crude oil future, so I will make it in auto mode, and you can see that day actually crude oil had this candle was created. This dipped a lot. And if I am talking about silver, because silver is always more sensitive to what the
Sir,
price
please
does.
zoom the screen a bit. Show sir. Please zoom the screen a bit. Otherwise, it's yeah, that's good.
Yeah, so you can see how big this movement was, almost from 64,000, 64,100. or to 62, so almost a 4% kind of a move, or 3.5% kind of a move. So to trade this kind of things, because in modern days when the market becomes in a range, if you are only an equity trader, it becomes very difficult, because if the market is stuck, but the commodities market will never be stuck, because commodities move with the dollar, and if the dollar is moving, if there is less opportunity in the equities, the dollar is moving less, you will get more opportunities in the commodities. And that is why the importance of multi asset trading. And that is where the picture of uh, that I will show you, that is where uh, our course of trading mentorship program comes in. It's a very high rated course. You can see almost 4.9 is the rating actually. So our rating is 4.9 out of 5 after 1904 students. So a lot of students have done this. If you really want to be a serious trader, full-time trader, you should join this, and you should learn how to trade in a multi frame. And for for the hand holding part, we are here. We are giving you in your giving you the input, that how you should manage the things, how what data is coming out, what commentary is coming out from the west, and how the market is going to move after the data is published. And we are representing that, because equities at times one day can be bullish, one day can be bearish. But if you think that all the commodities and currencies which are priced in asset, they move immediately with this. So if you are really interested, consider that. For tomorrow, let me show you again. Let me discuss the Nifty and Bank Nifty a little bit. See, this level of 17,580, 590 is very strong support tomorrow. Okay,
Sir,
based on,
screen change once again.
yeah, yeah, sorry, thank you. So 17,580, 17,590 is a very strong support. If that what will happen tomorrow, gap up or gap down, it will depend totally on the data that is uh, published, that is initial jobless claims data is going to come in a short bit. Okay, so if market right now wants bad data, okay, if bad data, then the propensity of fed rate hikes would be lower. So here you can see in 27 minutes initial jobless claims data is coming out. That is very important. But the most important data is the non-farm payroll data that will come tomorrow. If this data comes a little bit higher on the higher side, see 195K is expected. If this comes on the higher side, then Dow may bounce a little bit, and we may have a gap up opening. In that scenario, if market is able to protect this level of 17,580, we may again see a bounce back towards 17,750, 760 ahead of the non-farm payroll data. But if Nifty trade below this 17,580 or 570, you may see a dip towards 70,421. So this is clear demarcation for tomorrow how to trade. If I'm talking about Bank Nifty, okay. So in this Bank Nifty, see, this has been completely kind of a inside bar, not exactly inside bar, because the week was a little bit higher. So it is directionless right now. Okay, above 41,670, it can go to 41,900, but below 41,100, we may see a decline towards 40,184. But still, it is directionless. I think it will be range bound ahead of the non-farm payroll data, because market is expecting that, oh god, please send the data a little bit bad, job data bad, so that the fed is a little bit benign, and fed does not become very hawkish and raises 50 basis point on 22nd. But let us see, the data will come. I will suggest don't have a lot of position tomorrow, because the data will come after Indian market closes. So if you are thinking of a trade intraday and close intraday, especially in the index. If you are talking of stocks, Cummins Cummins India is looking a little bit good. So if it stays above this 1670, it can go a little bit higher. How much higher it can go? It can go higher this entire distance, that is from 1560. So 130, 140 rupees or 100, rupees upside it can have. Already 20 rupees of that has been there. So 80, 90 rupees. You can see a rounding uh, saucer kind of a pattern here. So that is it from my side. I would hand it over to Shanando again. Shanando, please, can you can you resume what you were discussing
Thank you.
and can conclude it accordingly?
Thank you, everyone. I hope my screen is visible to you all.
Not yet. Waiting. Yeah, now right now visible.
Okay. Thank you. I would just like to highlight, since we are a bit of late, I'd like to highlight few trades that may come. On special, I'd like to add to show this search that broadly we are expecting range, but this is really an interesting price action. This is really an interesting price action, especially when non-farm payroll data is coming up next. So, as per me, broadly, it's below the long-term moving averages, which is the thick red line. So, there exists an opportunity to the downside once the non-farm payroll comes solid. But yes, this could be speculative, may not be suitable to you all. So, please do your own analysis before assuming risk. I would also like to highlight a few stocks that I have found to be good. Let me check. Suprajit has been going on now; it's correcting a bit. Let me see. Broadly, this is the one. Godfrey Phillips is one I wanted to highlight that there is exist a possibility of a break. Once this shooting star is cleared, you can put an alert at the closing and put another alert at the top level, and this can give an upside opportunity. Overall, downside momentum is retracing. This momentum indicator is on the upside. Background has turned green. Overall, the moving averages have started pointing higher. Let me check if any other. Okay, another PNB Housing Finance. This one I highlighted in my Twitter account quite a while ago. So PNB Housing is another, yes, big candle. So another big expectation at that time I highlighted that I was expecting somewhere around 700. So yes, the expectation remains the same. Though I do not forecast my targets, rather I continue to follow the trend as long as it's there, well above the moving averages. This is also MGL. MGL is getting stronger, so this can be a good ride up to almost 1200. This looks quite strong move. Brave broken above this range 926. Can have a look at it. One is Oil India is another one getting stronger. Broadly, this is a break. If it's closed above this on a weekly basis, by Friday 3 o'clock, you'll know if it's closing above or not. This is a good one to hold at least till this high towards this 300 area. Well, few more stocks from this one. Siemens. Siemens continue to look strong. So if you're holding Siemens, good. If you're not holding, you can start with small quantity as you're entering at bit of late on this rally. But overall, the zone is green. Stay on the stock as long as there is a momentum. There's a momentum indicator. You can use any momentum indicator to decide what you should do. NTPC recently came in. Became look started looking interesting. So this is the level is trying to clear up. So once it starts to clear this level, there would be a good ride in NTPC as well. HAL has been going good for quite some time. I think the correction that we had, as you can see, this is where the raid, and now the momentum is going back. And what we are getting is basically we are getting a break without momentum moving to the green zone. So when once it starts moving to the green zone, we can see some big move on this one, HAL. Surya Roshni is another one going quite strong, and I expect it will at least test out these areas 820, 830. After that, we will see any kind of major consolidation. Similarly, this is the stock still not strong yet, but hinting at strength. You can put an alert around 309 when all these moving averages starts going above the red line. You can put any moving average 100, 50, 20, 30, 20. So once the smaller one goes above the one, that means overall market is good, and you can ride the momentum. Jindal saw continuously going up, still going strong. This break was a very good point of entry, but entering this one at this high always carries a risk. So do your own analysis. Vector, Mrs. Vector, I think a bit of correction is done. Tested out the moving averages. Now once it breaks above 551, you can have a good ride. Last one for the day is Usha Martin. You can see a good break, good weekly break with the return of momentum. All the moving averages pointing higher. So still a good ride on Usha Martin. So thank you all. So we started late. We continued till late. Thank you everyone for your patience and bearing with us. Thank you so much to you. Very, very good evening once again.